Money. It's the language we all speak, what we trade our time for. But for most, the grammar of how it actually grows remains a mystery. Stocks, real estate, bonds, it's a landscape that seems designed to confuse. So let's draw a clear map. We'll walk through each territory, what it is, how it works, and who belongs there. From Wall Street to Main Street, from concrete assets to digital code, every investment has a rhythm. This isn't hype, it's the real map. And by the end, money will stop being a mystery. Let's start with the classic, stocks. When you buy stock, you're buying a tiny piece of a company, a slice of the ownership. If the company succeeds, your slice gets more valuable. Simple. Until human emotion enters the room. Every market dip triggers a wave of panic selling. Every surge of good news creates a frenzy of buying. Billions of dollars move on fear and greed. The long-term winners aren't the ones who predict the future. They're the ones who stay calm while everyone else loses control.
They understand that patience pays far more than prediction, because you aren't just betting on a ticker symbol. You're investing in human ingenuity over time. Next, there are bonds, the quiet workhorse of the financial world. Here, you're not an owner, you're a lender. You give your money to a government or a corporation, and they promise to pay you back with interest. Bonds don't have the explosive potential of stocks. They don't skyrocket, but they also don't crash. If stocks are a roller coaster, bonds are a train, slower, steadier, and built for people who'd rather sleep well than chase a thrill. The main risk is interest rates. If new bonds are issued with higher payouts, your older, lower-paying bond becomes less attractive. It's a simple dynamic of supply and demand, but one that provides stability in a volatile world. Then there's real estate, the empire builder's dream, an asset you can see, touch, and live in. You can rent it for cash flow or flip it for profit. Its power comes from one word: leverage. Using borrowed money, you can control $1 million property with just a fraction of that in cash. When the market rises, leverage magnifies your gains into a fortune.
But it's a double-edged sword. When the market falls, that same leverage can magnify your debt until it crushes you. Higher interest rates can turn a dream home into a financial nightmare overnight. It's tangible, it's emotional, and when done right, it's timeless. Finally, we have the new frontier, cryptocurrency. Digital assets built on blockchain technology operating outside the old systems. For many, crypto represents more growth potential than stocks or real estate combined. It's a world of decentralized finance where peer-to-peer transactions are king. But it's also the Wild West. Extreme volatility is the norm, and the entire ecosystem is navigating a maze of new regulations. Its future stability hinges on whether governments can build frameworks that foster trust without stifling innovation. It's for the risk takers, the tech believers, and those who feel the future of finance is being written in code. So, stocks, bonds, real estate, crypto. Each is a different tool for a different job, for a different person. There is no single right answer. There is only the right answer for you. The goal was never to find a magic bullet, but to understand the map, to see the terrain clearly, the peaks, the valleys, and the traps. The game of money doesn't change, but now you know how to play.
Before there were stocks, there was gold. It doesn't pay interest, it doesn't grow, but it endures. When economies shake, investors run to the raw materials of survival: gold, oil, or grain. And in 2025, they've been running hard. Amid escalating geopolitical tensions and economic uncertainty, gold has surged past $4,000 an ounce for the first time. It's not just individuals. Central banks across the globe have been stockpiling it, buying a record 244 tons in the first quarter alone, trying to shield themselves from a volatile world. This isn't about growth, it's about protection. When the world panics, these are the assets that shine. Then a new kind of asset was proposed, one built to escape the old systems entirely. Then came crypto, decentralized, revolutionary, and ferociously volatile. Bitcoin, designed to bypass banks, has seen its price swing wildly, cresting over $100,000 this year. Ethereum turned programmable code into money itself. But with that freedom comes chaos. Scams, bubbles, and spectacular collapses are common. And now the specter of stricter regulation looms, a global push promising stability, but threatening the very principles crypto was built on. But for those who study the technology, the blockchain, the smart contracts, the new Layer 2 solutions working to solve scalability, this isn't just gambling. It's the painful, adrenaline-fueled evolution of finance itself. High risk, high reward. But what if you don't want that kind of adrenaline? What if you don't want to pick winners at all? Well, you don't have to. Enter ETFs and index funds, which let you own hundreds of stocks in a single click. They're designed to be simple, cheap, and effective, tracking entire markets. The world has taken notice. Assets in these funds have swelled past $17 trillion. But simplicity has its own complexities. During volatile swings, these funds can sometimes struggle to perfectly track their index. And with over 1,300 new ETFs launched in the first half of this year alone, the simple choice can feel overwhelming. Still, the core idea remains powerful. You're not betting on one company. You're betting on the long arc of human progress itself. And history shows that's a pretty good bet.
Then there's the truly unpredictable frontier, alternatives. Art, collectibles, startups, even wine. The global art market alone hit $70 billion in sales this year, and new blockchain technology is even allowing these physical assets to be tokenized, broken into digital shares for smaller investors. But make no mistake, these markets are unpredictable, often illiquid, and valuing them is more art than science. Think of them as wildcards. Fun, but don't build your future on them. Because here's the truth, after all this talk of markets and assets, the single best investment isn't a stock or a coin or a house. It's time. Time to learn before you leap. Time to let your money grow quietly and relentlessly. And maybe most importantly, time to stay calm when everyone else is losing theirs. Every single one of these strategies, from ancient gold to digital code, comes down to one powerful idea: trading a little bit of comfort today for freedom tomorrow. Start small, stay consistent, and remember, the goal isn't to be rich, it's to be free.